Traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to sorry, I was just reading something. Okay, so let's take. We're going to start with our morning analysis as we always do. Let's go over to the euro dollar. Give me 1 second. Hold on 1 second. All right, sorry about that. Okay, so let's get through our analysis process. Okay, so the euro dollar. Now, somebody had brought to my attention yesterday the potential of the euro dollar setting up an inverted head and shoulder pattern. And yesterday to me seemed a little early in that development process, if it was the case. Today, you know, it's possible. Now, look, we're in a very choppy trend. Whenever you look at head and shoulder patterns, they tend not to be as important or effective, rather, when you're in, choppy trends. Like you can see the euro dollar clearly is in a very range bound situation. Now, we have been in a downtrend for a long time. That's going to help the argument that we could have an inverted head and shoulder pattern here. But the way we can look at it right now is this, to me, neckline or not, what you could say, well, Blake, is this the inverted head and shoulder pattern neckline? Right through here, you can see there's a shoulder. Here's the head. Are we developing the shoulder? This may develop for a couple more days. And if you think about going out to Thursday, the ECB meeting's on Thursday. If the ECB under delivers, we're going to do this, right? We're going straight up, right? That's logical to me. And I don't think we can dismiss the fact that we have a setup here. We have the continuation arm over here, so we can build out an inverted head and shoulder pattern if we really want to. Now, I don't think we're going to break today, so that means that if you're trading the euro today, you're probably on you're not too much in jeopardy if you shorted up at this 110. We'll just call it 110.60. Okay, that is resistance here. 110.67, 110.65. The low right here is 110.66. So I'm going to write down 110.65. If you short against that, meaning that if we get up to 110.50, 110.60, and you take a short up there, that's probably fine. Now, I'm long, but I'm just saying that I don't think you're risking a whole lot. If you can get short here, probably put in a 30 pip stop and not really sweat it too much. You know what I'm saying? But I do think that's going to be key resistance. And if I suspect, if I'm right, and this is an inverted head and shoulder pattern, then we have a little bit more development to do. Okay, think about, this is a 4-hour chart, right? So think about the next couple of days. We're going to build a candle here, 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 and then, then the ECB meeting will send us that way or this way, right? Really, it's, seems that seems logical to me. Okay, so now where does that mean support is? Well, support is going to be right there, right? That's where support's going to be. So let's take that low, which is 109.39, which is 109.40, which is very close to this low over here, which is 109.56. 109.40 should hold if we are developing a head and shoulder pattern, 1.040. Okay, that should be pretty important support if we're developing that inverted head and shoulder pattern. Okay, we'll know by the end of today, but I personally, if we just to let you guys know, if we get up towards this 110.60 level, I might take off a little bit more of my euro logs. I might do that ahead of the ECB meeting, but I'm going to try to hold a position through the ECB meeting. I've got a decent cost average. As you guys know, I was buying down there. How many of you? Let me ask you this: how many of you are still long the euro dollar? And James say, oh, you know what? This is a good comment. He goes, it looks like a cup and handle to me. Like cup, handle. It could be. It could be. If it is, James, if it is, we're going to break out soon. Like we could break out today. So let me just clarify. If we break out today, this could be a cup and handle pattern. Like cup, handle, right? So, I mean, if we break out today and ahead of the ECB and we start rallying, then it is a cup and handle pattern. We should stop somewhere around here. That would be fantastic. I'd be happy with that. So, looks like not very many of you guys are long the euro anymore, which is good for me. It's good for me. It's not good for a lot of you guys, but it's good for me. Let's see, that Alan is, Cliff is, Greg is, Michael owns it at 109.19. Nice. Okay, 109.19. Kevin H just took profits now. Ron is long the euro from 109.84. Good. My cost average is 109.59. So, and that's after FIFO because I was long the euro down here. I took profits up here, most of them, and then I added a little bit down here, so now my cost average is 109.59. I made a lot of money on the euro last week. Greg says Greg's long the euro dollar and the euro Canadian and the euro pound. Different reasons, but good, Greg. Jose said I got out of Friday at 110.30. And Daryl says we're all just trying to jinx your yen trades. Apparently so. Let's get over to the yen. Well, we'll get over there next. Let's go over to the cable. So here's the pound. All right, so the Bank of England, Mark Carney, he talked last night, and the Bank of England's going to try to avoid any, influence of the EU referendum. It's not their, their jurisdiction, I guess is the way you can look at it. But whatever they have to do, the BOJ or the BOE, excuse me, they have to respond or take measures if they feel that the risks are high that the UK leaves, the European Union. And so I think that we have to be a little careful, obviously, in the months ahead. Now, what's interesting about the cable is this daily trend line. This is capping the cable. If you want to short the pound dollar, and I'm not going to join you at this point because I'm actually long the dollar Canadian. I guess I'm long and short the dollar right now. I mean, I'm short the dollar through the euro, I'm short the dollar through the yen, but I'm long the dollar versus the Canadian. So look, if you want to short the cable right now, that's fine. Put your stops above this high right here. Okay. Now remember this gap right here that has not been filled yet. Here, let me grab this. This is your risk right now. if you short the cable. If you short the pound dollar, the risk is this resistance, which now comes in at basically 143. Okay. I know the highs here are 142.80, but I would say the resistance is 143. 143, and that's major resistance. Okay, we're in a range right now. Now, in my opinion, it looks like the cable is going to pull back a little bit. We're probably going to pull back and try to maybe regain our composure down here, realistically. This looks like where we're going, in my opinion. Now, I don't think we're going to get here today necessarily, but that's what I would be looking for, especially if you're looking to get long the cable, like buying it down here. Seems like a logical trade to me. Now, that doesn't mean that's where support is at the moment. Support, the reason why this support is going to be really important for the cable is because if we break it, then we make lower lows, and then that puts us in motion down to here. Okay, so the support is coming in at 141.30, basically. We need to hold above 141.30. Now, I don't have any position in the cable right now. It is trading heavy, though. It is. It's trading heavy. It's been heavy all day. I mean, you can see how the euro is. The euro's up 11 pips. The cable's down 50. The Aussie's only down 13 pips. The cable's down 50. It's. I mean, it's underperforming at the moment. Okay. Where do I? Okay, let's go take a look at the Swissy, and then we're going to go over to the yen. Here's the Swissy. Here's the Swissy, and the Swissy's actually acted technically pretty well. I mean, if you look at it, we hit a 618, we rejected it at the 618. We stalled there, made a lower high, we fell. Now that lower high also coincided with this, trend line retest, and then, support's been holding thus far. This support is going to be pretty key. That comes in at 98.80. Resistance is parity. Well, it's at 1.0030, but I don't know if there's a lot to do right now while you're in between that resistance and that support. Personally, I'd rather buy the Swissy down here. I know I've told you that a million times. I'm not interested in trading the Swissy where it's at right now. But if we break through this 98.80, I think that is an indication that dollar weakness is going to be coming through the market. So that's why I think you should pay attention to it, especially if you're short like the dollar yen. If you're short the dollar yen and the Swissy starts breaking through that support, that's going to just confirm, that you're on the right side of the dollar. Are you watching crude oil, by the way? Crude just spiked. Sorry, I just looked over and I saw it. take a look at crude oil really quick because we're going to have to look at the Canadian here momentarily. Look at crude. We might be at new trend highs. We are, which I don't, look at the divergence between here. Let's go like this. So here's crude, okay? Look at the, see, look at the difference in, see how crude's hitting new highs? See how the Canadian's not hitting new lows? Very important to recognize. That means if crude stops, which I hope it stops soon, please. If crude stops, then the dollar Canadian is going to turn around and rally pretty significantly, I would think. Okay. Anyway, just a heads up. We got a heads up on crude. Okay, so dollar yen. Let's go over to dollar yen. All right, here's the dollar yen. As I had pointed out, that the S&P is stronger, pulling up the dollar yen, but even as the S&P has recovered and the Dow futures have recovered a lot of their losses this morning, the dollar yen is not that far off of the lows, which, as you can see, is a 50% retracement of the most recent low right here, okay, to the high. 50% is holding. So if we can break through this 112.75 level, we should get back down towards the low, 112s. There's a 618. It's a 112.40, I think. Maybe even break below the 112 support. But that's really critical there. Okay. Resistance now is 113.20, whatever the high is overnight. 25. 113.25. Now we could break above that, especially if equity markets continue to recover. But the dollar, oops, shoot, I'm sorry, I wrote it in the wrong spot. 112.75, 113.25, bearish. Okay, we might actually keep that still in bearish. All right, as long as we stay below this resistance, though, we're still bearish. So, and remember, we're in a big head and shoulder pattern. Head, shoulder, shoulder. We're still in breakdown territory. Okay, let's go over the dollar Canadian. So the dollar Canadian, we held trendline support. Okay, we held trend lines. Here, let's put in the 200 period moving average. Okay, so we have trendline support, 200 period moving average, 786 retracement, 161% extension. All of that stopped the U.S. dollar Canadian yesterday. Okay, that is important support now, and that is 132.58, 132.60. Whoops, 132.60. Which is just going to be mega support now. It was 132.30, but 132.60 is mega support. If you can get long the dollar Canadian down there, that's the place where you want to be on the long side, okay? Because you'll have the best risk reward down there. Obviously, I started buying ahead of time, but that's okay. It's all right. I'm still looking for a move a lot higher. All right, now, what's going to take the downside pressure off the dollar Canadian now? That's pretty simple. This is where we go from bearish to neutral, I think. That high is 133.76, so 133.75. That was yesterday's highs, remember? Okay, if we can get past 133.75, that will take the bearish pressure off the dollar Canadian, in my opinion. But right now it's weakening because obviously crude oil is um, rallying at the moment. Okay, but 133.75 major support down there, and or major resistance right here 133.75. We can break that. That's going to take the downside pressure off. We'll probably be on our way to like 134, 135. Okay. When we come back, we'll do the Kiwi, the Aussie. I'm not in any particular hurry today because the only thing we've got going on is we have Canadian. We have actually Canadian housing data coming out in about 20 minutes, and then more in 35 minutes. All right. I'll be back. Don't go anywhere. I'm going to go get some more coffee. Thanks. Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to go into the Kiwi. Now, it's interesting. The Aussie continues to rally. The Kiwi was hampered by a couple of things yesterday. The Fonterra lowered their prices, and it's interesting. Also, the Fonterra CEO said yesterday that he felt that dairy prices were abnormally low. I've heard those similar comments from the Fonterra CEO sounds a lot like a lot of the precious metals CEOs of different companies when precious metals were falling. Obviously a Fonterra CEO is going to say something about dairy prices being that is affecting his industry. He's not going to say, oh my God, dairy prices are going so much lower. It's ridiculous how weak demand is right now. But he's saying that they're unreasonably low. But that doesn't mean anything. It's all about supply and demand at this point. And I'll tell you, the Kiwi has really been stuffed because of dairy prices, and a lot of that is just lack of demand from Chinese consumers. Now remember, China is New Zealand's biggest trading partner. It's not in Australia anymore, and that is, in my opinion, something that hasn't been really factored into the Kiwi, and that's why I think that the Aussie New Zealand is so bullish. That's why I'm very long the Aussie New Zealand, and I continue to be long that currency pair. Right now, the Kiwi, we stopped at the 127% extension. We actually filled the gap yesterday, and then we fell. All right. Now, that suggests a couple of things. First of all, 68 cents is really big resistance. Okay. I know we've been higher than that. I know we've been 68. What's the high here? 68.20. Right here is 68.10 or 68.14. So that means the next rally should fall, just right at 68 cents. If you can get a short on the Kiwi at 68 cents, I think that's going to be a great place to be on the short side of the Kiwi, frankly. All right, just because it is really just, I think that just a place you want to be on the short side. Now, as far as support goes, we're going to have to look at last night's overnight lows. This is holding right now. You can see there's a spike low right at the same spot right over here from a couple of days back. So that low is 67.38. So basically 67.40. That support, if that breaks, that 67.40 level breaks, that's going to bring in some downside on the Kiwi, FYI. Okay. I have a little bit of short Kiwi through the cable. You know, I'm long the pound New Zealand just a little bit. I'm long the Euro New Zealand a little bit. And I'm, you know, long the Aussie New Zealand, and I'm short New Zealand yen. Um, I'm not short the New Zealand dollar. But man, if we break through this support, I don't think being short the New Zealand dollar is going to be a bad idea. You know, we're probably going to trade back down towards 66.50. You know, this will probably trade right back through to here, I would think. Okay, but we're holding up for now. You know, probably has more to do with equity markets holding up well, but support is right there. Okay, let's take a look at the Aussie. Now, the Aussie Chinese trade balance came in worse than expected, but the Aussie is still holding up well. And you have to realize that this Aussie dollar is strong. And yeah, there is some resistance. Donald pointed out the 50% retracement right here, so thank you very much, Donald. That's a 50% retracement of the last daily swing high. And I'm not a big 50% retracement person, you know that. Okay. That 50% retracement comes in at 74.95, so at 75 cents. That is going to be key resistance for today. Now, support, in my opinion, is going to be down here at 74 cents, right there, or just below. Let me get rid of this too. Let's get rid of that. We don't need that. Okay, so 73.95, 92. So 73.90. 73.90 is going to be a pretty important support. As long as we hold above 73.90, I think the bullish trend is intact right now, and this is 75 cents. And the Aussie is bullish at the moment. Okay? Come on, dollar Canadian. Come on. Get up there. Get up there. All right, let's go to the dollar index. Here's the dollar index. Let's do a little bit of work here. Let's go to the 4-hour. Let's delete this. We don't need that. We don't need that. We need that red line for now. That's obvious, that dotted red line. Low. High. That 50% retracement held, which is 96.88. We'll write down 96.90. That's a 50% retracement, but that's holding. Okay. Now resistance. I know I have this 200 paired moving average in there, but I'm not really looking at it. Resistance on rallies, it's hard to say. Really, it's actually very difficult to say with this chart. Maybe about 97.30, because see how we cap there, there. The trend line's holding us right now hostage. So 97.30 for now. It's not great resistance, but it is resistance. Okay, we are in a range. Let's go over to the peso. Now the peso, it still is holding up, and mostly due to, you know, a little bit of risk aversion that we've seen. I'm going to remove this. Hold on. You have to realize that if the US dollar Mexican peso gets back above 18, that means that this market is seeing some severe risk aversion. So just FYI. That's resistance. The support doesn't fall around anything that I find very important at the moment, but we'll just mark the lows, which are right here at 1770. It's not good support. It just happens to be where price found support. So 1770, and we're still in range. Again, if we break above 18 in the U.S. dollar Mexican peso, you know that risk aversion is picking up pretty aggressively. Let's go over to the Nordic currencies. I've been so bummed out the Nordic currencies haven't given some great opportunities recently. I mean, the Norwegian krone, I guess, has. We held support down here. I don't know what to do with the U.S. dollar Norwegian krone at this point. But it is held. It's held up pretty darn well, and we have this trend line, the support that's coming into play. But there's nothing to do at this moment, unless you got up to, 866. You may play it on the long side or on the short side, and then get long around 845. But I don't know if crude oil rolls over here. This thing's probably going to move higher. But at the same time, the euro dollar is going to have to roll over too. So I don't know. It's a kind of a mixed bag with the Norwegian krona. Swedish krona. Yeah, I don't think there's a whole lot to do with the U.S. dollar Swedish krona either yet. Now, when these Nordic currencies move, it's going to be fun. But they're kind of sideways right now and very choppy. Okay, so I think that's it. That's it for your bias chart. Let's go into questions. I'm going to go into earlier questions. Let me see, where was I?